Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, December the 18th. The year's 2018. Let's talk trading. Inside, outside. You're probably thinking I'm going to talk about inside bars and outside bars. Nope, that's not what I'm talking about. I'm talking about trading, the part that's inside of you and the part that's outside of you. We touched on this a little yesterday. Thing is, hopefully you have a trading plan. You've got a method. You've got a system. There are steps. And if you are manually entering the trades, then you've already done the thinking. So when you get the signal, you just have to be like the monkey waiting for the banana. You just have to click. You don't have to think. Problem is inside of you, you might have something like doubt, worry, fear. Is this trade going to be a loser? If that's inside of you, it's just not going to work out very well. See, on the other hand, what's outside of you, you really don't have that much control over it. Once you put the trade on, you know what you can control. You can control your risk, your loss. That's what you control. But it's all that stuff that's inside of you that could possibly be holding you back. So that's what you have to look at. Are you hesitating? Are you second guessing? Are you doubting? Because, see, on any particular trade, it could be a winner or a loser. So there's no sense in wrapping up all that energy into that one particular trade. Because if you're using good money and risk management, you already know how much you're willing to lose per trade. So there's nothing to fear because you know what the outcome, this should be the worst possible outcome. Barring unforeseen circumstances like your power goes out and your stop loss wasn't in, it was only on your computer, wasn't in this, in the broker server, and it just passed your stop loss. And the reason I say power, we lost power here last night for about 4 hours. Live out in the country, a big windstorm. So, you know how much you're willing to lose per trade. So once again, let's focus on what's inside. Let's clean it up, clear it up, so you can move forward. On the monthly, only 27 pips off that low. As you can see, we're still outside of the upper and lower wick zones on the monthly. But we have broken through the bottom wick zone, the lower wick zone on the weekly. Still one gap hasn't filled. But you can see here, we're below by about 10 pips. And on the daily, you see here, we broke out of that lower wick zone, got into the upper just slightly, came out of the upper, and all the way back down. But the range is just lousy 47 compared to the dollar yen, which is at 60. And we have 1, 2, 3, 4, 5, 6, 7 pairs over 100. Notice something here. You see these wick zones. That price broke out of that one, kind of broke out of that one, but now it's coming back the other way. You see, broke out of that wick zone. Looks like it's trying to break out of this one. And we've got a missed pivot here. You can see here, buy zone trigger at the open, failed to go across that weekly open. That should be a scratch. You find it hit tough sledding there, came back. Actually, before that, we even had a short trigger. Then we had another short trigger. You can see here we had a short trigger here, a short trigger here, a short trigger here, short trigger here. So you can see we're still below that weekly open. And so we're only about 10 or 11 pips. So right there, when you see this type of setup, you probably want to be short below the weekly and long above it. Rat zone, just 6 pips of separation. Not really much, just trading rat reversals for a handful of pips. Once again, we missed that pivot. And you can see here, we missed it by 4 pips. But price action, there's 466. Buying ticks good for 4.9 pips there. As you can see here, 3 ball at the bottom, green at the line, paid off. 1 ball at the top, red at the line, paid off. Oh, I missed. We've got a 1 ball here, so we're going to look to go green at the line. We should probably let this bar close and see what happens. Pro traders, there's a Larry live trade happening now. Experienced traders. I keep saying pro. Okay, once again, here at the 128, you can see all the price action around here. Now, usually when price gets at a double O, I like to think, okay, what's more likely, 129 or 127? And you place your trade accordingly. Wick zones, you see we have huge wick zone in the upper, touched it and out, in and out, in and out. You can see here it's spending a lot of time in the wick zone. There was an inside bar here. Talking about inside, you see what happened, it broke out. And this one became an outside bar. You see what happened there, it broke out. And we've got another inside bar right here on the H1. Holo set up. We had a lowest open, dipped back in, gave you another opportunity, and nice little run. Inventory retracement bars, long trigger at 27.97 and a short at 27.91. My favorite trade, previous week low, previous day low. You can see that's basically leaving wick zones. Pips to be picked up. Looking here at the tick chart. Now, some people are actually liking trading with the tick chart, going for buckets of pips, or once again, using the tick information to pinpoint your entries. There's no reason to buy if selling is going on, and there's no reason to sell if buying is going on. So you just can wait and wait. It took me a long time to figure that out. Why is it? As soon as I enter a trade, it would go against me. Well, I wasn't watching at the tick level. That's why. Sometimes you just have to be patient. I mean, there's that fear of missing out where you've got your setup, it's almost there, but you're supposed to wait for something. And that last thing, you just don't wait for it. You rush it. And next thing you know, you're looking at drawdown. You're looking at your stop being hit. Had you only waited for just everything to line up. But once again, inside your head, you've got that fear, that FOMO, fear of missing out. And you're just afraid. It's really fear-based. You don't want to miss out because that could be the big one, and you want to make sure you get it. Or, on the other hand, maybe you think you can cheat the system, outsmart it. Yeah, I can get in here at a better price. I see it so many times when you're doing a holo trade. When traders are doing the holo, They just won't let that candle close. They just won't let that candle, when the candle opens, they won't see if it tests the bottom. No, they got to jump right in. Don't do it. And one of the things about jumping in, and we saw that, I think I saw it with the rat trade. Way back when we were talking about the rat zone a lot, and it's still a valid system, still employ it. I told, say, if you're a trader and you're having trouble with the rat zone, move all the way up to H4. Because you can see here, when you get that, you wait for this, it's a red candle. So you're not gonna go long. So right here, this candle tested the open, came back around, turned green. You see right there, you were green at what, 73? That was 11 pips below here. And what was the high on this candle? 98. So that was good for about 25 pips or more. If you just waited, you just slow down. Because see at H1, once again, don't trade against the H1 candle color. That was the main thing. I've said it so many times. So here, you just have to wait, Let this candle close. Then you see here, it opened, made a new low, came back. So right here, this is your opportunity. And what do? Well, green, you take that trigger there. There were some pips. Remember, you're still in that rat zone. So if it comes back at you, just scratch the trade or take a pip or two. And then you see here, would have saved you some pain. Right there, it wouldn't have stopped you out. You would have been sweating, but then it paid off. But you can see here, rat reversal. Red H1 closed, green closed. There's your trigger. Boom. So sometimes you just have to wait. But if you let fear that price is going to take off on you, run your trade, and you get caught up in the emotion as opposed to being clear, cool, logical, reasonable, and you just wait. And you say, no, that's not a clear signal. I'm waiting for everything to line up. Because, isn't it better to be waiting and miss out than waiting and you have a big loss? So just keep that in mind. And where were we here? Inventory reduction, favorite trading screen. We looked at that. Einstein line. Once again, simple trade right there at the line. Sometimes it pays off real nicely. And that's just what happens. And a nice, almost 5, 6, 7 pip run right there. Whoops. Now, before we end, let's see. Somebody was asking me about inside bars. I'm really not sure what their issue was with this. They were saying they weren't getting an alert. I don't think what you want as an alert, this isn't set up for. You see, this was set up to say when the inside bar is 1 bar ago alert. Now, what I might be able to do is use maybe use the threshold input, and then you can specify which bar is the bar that lights up. But I wanted to be 1 bar ago, so hey, we've got an inside bar, I can see it. So that's pretty much it, fellow traders. Once again, inside, outside. Focus on what's inside of you, because if that's not right, the outside doesn't matter. So, as always, it's not what you trade, it's how you trade it. Now get out there and drain the banks.